All right, welcome back to the AG Insider. I am Captain Silver, and I need you to stop everything you are doing right now because Wall Street has just accidentally leaked the most terrifying countdown in the history of the financial markets. A senior portfolio manager at Ninepoint Partners just admitted on record that the world's largest precious metal producers only have 12 years of reserve life remaining and absolutely no strong pipeline of new discoveries to replace them. The 12-year death clock has officially started. And while the masses are distracted by $83 paper, silver bouncing around on their screens thinking, this is just another normal trading day, the physical supply of the most critical industrial metal on Earth is mathematically going extinct. This is not a drill. This is not a fear-mongering headline. This is a cold, hard geological fact that the mining industry itself has now admitted publicly. The mines are running out. The reserves are depleting. And there is nothing in the pipeline to replace them. Now, I want to ask you a very direct question, and I need you to answer this honestly in the comments below. Are you planning your wealth strategy around this 12-year physical deficit, or do you actually believe the COMEX algorithms can just print more silver ore out of thin air? Because this is the reality check that separates the people who understand physical scarcity from the people who think that markets are just numbers on a screen. Let me know your exact stacking timeline in the comments below. Are you buying aggressively right now? Are you waiting for some mythical dip that is never going to come? Are you still sitting in cash thinking you have plenty of time? I want to know where you stand because the 12-year clock is ticking and every single day that passes is one less day of available supply. Let me break down the brutal reality of the mining industry because this is something that most investors completely fail to understand. Mining is a depleting business. It is not like a software company that can scale infinitely. It is not like a service business that can just hire more people and grow revenue. Mining is the extraction of a finite physical resource from the earth. Every single ounce of silver that is pulled out of the ground is an ounce that is gone forever from that deposit. When a mining company says they have 12 years of reserves, that means they have identified enough ore in the ground to keep their existing operations running for 12 more years at current production rates. After 12 years, the mine is empty. The ore is gone. Production stops. And unless they find new deposits to replace those reserves, the company ceases to exist. Now here's where it gets absolutely terrifying. The major producers, the big mining companies that supply the bulk of the world's silver, are all facing this 12-year cliff at the same time. This is not one company with a problem. This is the entire industry facing a systemic depletion crisis. And the reason this is happening is because of the decade-long bear market in silver that I've been screaming about for years. From 2011 to 2020, silver prices were suppressed so low that the mining companies could not justify investing in exploration. They could not raise capital to fund new discoveries. They could not afford to drill. They could not afford to advance new projects. So they just mined their existing reserves and hoped that the price would recover. But the price manipulation continued, and now they are staring at empty pipelines. The senior portfolio manager at Ninepoint Partners who leaked this information is not some random YouTuber making predictions. This is a guy who manages billions of dollars and who has direct access to the mining executives. He talks to the CEOs. He sees the reserve reports. He knows the geology. And he is telling you on the record that there is no strong pipeline of new discoveries to replace the reserves that are being depleted. That means that in 12 years, the world's largest silver producers are going to be producing significantly less silver than they are today. And given that it takes 10 to 15 years to discover, permit, and build a new mine, that means we are already past the point of no return. Even if they started finding massive new deposits tomorrow, those deposits would not come into production until the late 2030s or early 2040s. We have a lost decade of exploration, and we are about to enter a lost decade of production. Now let me explain why this specifically destroys the silver market in a way that it does not destroy other commodity markets. Silver is not just a monetary metal that investors buy to protect against inflation. Silver is the backbone of the global tech, AI, and military industries. It has the highest electrical conductivity of any element. It has the highest thermal conductivity. It is irreplaceable in countless industrial applications. Every solar panel requires silver. Every electric vehicle requires significantly more silver than a traditional car. Every AI data center with thousands of servers requires massive amounts of silver in the electronics. Every semiconductor chip requires silver. Every 5G cell tower requires silver. Every missile, every radar system, every advanced weapon system requires silver. The modern technological economy cannot function without silver. And here is the nightmare scenario. These massive tech corporations are aggressively draining the above-ground physical supply right now. Apple needs silver. Tesla needs silver. Nvidia needs silver. Every semiconductor manufacturer needs silver. The U.S. military needs silver. And they are buying it in massive quantities because they need it to manufacture their products. They are not buying it as an investment. They are buying it as a raw material input. And that demand is inelastic. When you are building a $50,000 electric vehicle, you do not care if the silver costs $80 an ounce or $150 an ounce. It is a tiny fraction of your total cost. You are going to buy the silver regardless of price because you need it to build the car. So you have industrial demand that is exploding and inelastic hitting a supply that is depleting and cannot be replaced. And because it takes 10 to 15 years to permit and build a new mine from scratch, even if the paper price of silver goes to $200 tomorrow, the mining industry mathematically cannot fix this deficit in time. By the time a new mine comes into production, the 12-year reserves will have already been depleted. The industrial buyers will have already drained the above-ground stockpiles, and there will be nothing left. This is a supply crisis with no solution. The paper market manipulation has artificially suppressed the price for so long that they accidentally destroyed the future supply chain. They killed the exploration sector. They prevented new discoveries. And now we are facing the consequences. Let me give you some specific numbers so you understand the math. Global silver demand is approximately 1.2 billion ounces per year. Global mine production is approximately 820 million ounces per year. That is a deficit of 380 million ounces per year that has to be filled from above ground inventories. Now let us assume that the major producers maintain their current production levels for the next 12 years and then production starts to decline because their reserves are depleted. Over the next 12 years, they will produce approximately 9.8 billion ounces. But demand over that same period, assuming it stays flat, which it will not because industrial demand is growing, will be approximately 14.4 billion ounces. That is a cumulative deficit of 4.6 billion ounces that has to come from somewhere. Where is it going to come from? The total above ground stockpiles of silver available for an investment are estimated at around 2 billion ounces. That is not enough to fill a 4.6 billion ounce deficit. Even if every single investor in the world sold all of their silver, it would not be enough. And that is assuming demand stays flat. But demand is not staying flat. Demand is accelerating. Solar panel installations are growing exponentially. Electric vehicle production is ramping up. AI data centers are being built at record pace. Defense spending is increasing globally. The demand growth curve is going up while the supply curve is going flat and then down. This is the recipe for a price explosion that makes $50 silver in 1980 look like a warm-up act. Now let me talk about what the mining companies are going to do in response to this crisis, because this is where it gets really interesting. When a mining company realizes that they are running out of reserves, they have a few options. Option one is to dramatically increase their exploration spending and try to find new deposits. But as I have already explained, that takes time and there are no guarantees. Option two is to acquire other mining companies that have reserves. This is called consolidation, and we are already seeing it happen. The major producers are buying up the mid-tier producers. The mid-tier producers are buying up the junior explorers. Everyone is scrambling to acquire reserves before they run out. And option three is to hoard physical metal. If you are a mining company and you know that silver is going to be in short supply in the future, why would you sell all of your production at today's suppressed prices? You would hold back a portion of your production and store it so you can sell it later at much higher prices. We are already seeing evidence of this. Some of the major silver producers like First Majestic have announced that they are holding back a portion of their silver production instead of selling it immediately. Why would they do that? Because they know what is coming. They know that the price is going to explode. They know that the 12-year death clock is ticking, and they want to maximize the value they get for their silver. This is a huge signal to retail investors. If the people who are actually mining the silver are holding it instead of selling it, that tells you everything you need to know about where they think the price is going. Now let me talk about the mergers and acquisitions frenzy that is about to hit this sector, because this is going to be absolutely wild. We are entering an era of unprecedented physical scarcity. The major mining companies are going to be forced into a desperate scramble to acquire reserves. They are going to be bidding against each other for the few remaining junior explorers that have promising projects. They are going to be paying massive premiums to acquire those companies. And the shareholders of those junior explorers are going to make fortunes. But here is the key point. The institutions and the billionaires know this. They are already positioning themselves. They are buying up stakes in the junior explorers before the M&A frenzy begins. They are front-running the consolidation wave. And this is not just about mining stocks. This is also about physical metal. The smart money knows that physical silver is going to become increasingly scarce as the industrial buyers drain the supply and as the mining production declines. So they are buying physical bullion and taking delivery. They are storing it in private vaults. They are locking up supply before the general public wakes up to what is happening. And when the general public does wake up, when the 12-year death clock becomes mainstream news, when people realize that the mines are running out, there is going to be a panic rush into physical silver that makes the toilet paper shortage of 2020 look like a minor inconvenience. Let me talk about what you need to do right now, because this is not a spectator sport. You cannot just sit back and watch this unfold. You need to take action. You need to act as your own central bank today. What does that mean? It means you need to accumulate physical silver and hold it as a strategic reserve, just like central banks hold gold. You need to front-run the billionaires. You need to buy the $83 paper dip while it is still available. You need to secure your physical ounces locally before the industrial world realizes that the 12-year countdown has already begun. Go to your local coin shop. Call them today. Ask them what inventory they have. Buy silver eagles, buy silver maples, buy silver rounds, buy silver bars. Get as many ounces as you can afford. Take delivery. Store it securely and hold it for the long term. Do not try to trade it. Do not try to flip it for a quick profit. This is a strategic asset that you are holding to protect your wealth from the collapse of the fiat currency system and to benefit from the coming supply crisis. Think of it like this. If you knew that oil was going to run out in 12 years and that there was no alternative energy source ready to replace it, what would you do? You would buy oil and store it. You would lock up supply while it was still cheap. Silver is the same. The supply is running out. There is no substitute for silver in most industrial applications. And the people who own physical silver when the supply crisis becomes obvious are going to have an asset that is worth multiples of what they paid for it. Now let me address the skeptics who are going to say, but Captain Silver, what about recycling? What about technological improvements? What about substitution? These are all valid questions, but they do not change the fundamental thesis. Recycling does provide some silver, but it is only about 150 to 200 million ounces per year, and most of that is already factored into the current supply-demand balance. You cannot recycle silver that does not exist. And much of the silver that goes into industrial applications is used in such small quantities and is so dispersed that it is not economically viable to recycle it. The silver in your smartphone is worth maybe $1. No one is going to spend the time and money to extract it. Technological improvements might reduce the amount of silver needed in some applications, but they take time to develop and deploy. And in many cases, there is no substitute for silver. It has unique properties that make it irreplaceable. You cannot use copper instead of silver in high-end electronics because copper does not have the same conductivity. You cannot use aluminum instead of silver in solar panels because aluminum does not have the same reflectivity and conductivity. Silver is the best material for these applications, and in many cases, it is the only material that works. Substitution is always possible in theory, but in practice, it is very difficult. The entire global industrial infrastructure is built around using silver in certain applications. Redesigning products to use a different material takes years of research and development. It requires retooling factories. It requires retraining workers. It requires getting regulatory approval. By the time companies could substitute away from silver, the supply crisis will have already happened and the price will have already exploded. So substitution is not going to save the silver market from a supply squeeze. Let me talk about the timeline because people always want to know when this is going to happen. The 12-year death clock started the moment the mining companies admitted that their reserves are depleting and that they have no strong pipeline to replace them. But the crisis is not going to wait 12 years to manifest. The crisis is going to hit much sooner because the market is forward-looking. As soon as investors and industrial buyers realize that the mines are running out, they're going to start hoarding supply. They're going to start bidding up the price. They're going to start panicking. And that panic is going to happen long before the mines actually run dry. My estimate is that we are looking at 2 to 5 years before this becomes a mainstream crisis. Within 2 to 5 years, the declining COMEX inventories, the tightening physical market, the increasing premiums, and the rising industrial demand are all going to converge into a perfect storm that sends the price of silver into the triple digits. And once that happens, once silver breaks above $100 and holds it there, the floodgates are going to open. Every momentum trader, every algorithm, every retail investor who is sitting on the sidelines is going to pile in. And the price is going to go vertical. Now let me talk about what this means for the broader economy, because a silver supply crisis is not just a problem for silver investors. It is a problem for the entire technological economy. If industrial buyers cannot get the silver they need at reasonable prices, it is going to disrupt manufacturing. It is going to delay production of solar panels, electric vehicles, semiconductors, and advanced weapon systems. It is going to create bottlenecks and shortages throughout the supply chain, and governments are going to be forced to intervene. They might impose export restrictions on silver. They might prioritize certain industries over others. They might even nationalize silver mines to ensure strategic supplies. This is the kind of crisis that has geopolitical implications. And here is the irony. The same governments and central banks that have been manipulating the silver price down for years to protect the fiat currency system are going to be the ones who suffer the most from the supply crisis, because they need silver for their military and their technology infrastructure. The U.S. military cannot function without silver. The Chinese military cannot function without silver. Every advanced economy in the world depends on silver. And when the supply runs out, the countries that have stockpiled physical silver are going to have a massive strategic advantage over the countries that relied on the paper market. This is why I keep telling you that physical silver is not just an investment. It is a strategic asset. It is a form of insurance. It is a store of value that cannot be printed or debased. And in a world where the fiat currency system is collapsing and the supply of critical industrial metals is running out, physical silver is going to be one of the most valuable assets you can own. The people who understand this and who position themselves ahead of the crowd are going to preserve their wealth and potentially multiply it many times over. The people who ignore this and who stay in cash or paper assets are going to watch their purchasing power evaporate. Now let me give you one final thought, because I want to make sure you understand the magnitude of what we are talking about. The 12-year death clock is not just about silver. It is about the end of an era. For the past century, we have lived in a world of abundant, cheap resources. We have been able to extract minerals from the earth faster than we consume them. We have been able to grow the economy without worrying about physical limits. But that era is ending. We are entering a world of scarcity. A world where the easy to extract high-grade deposits have already been mined. A world where the remaining reserves are deeper, more difficult, more expensive to extract. A world where the supply of critical materials cannot keep pace with demand. Silver is just the leading indicator of this trend. But it is going to be followed by other metals. Copper is facing a similar problem. Lithium is facing a similar problem. Rare earth elements are facing a similar problem. We are running out of the materials that are essential for the modern economy. And the countries and the individuals who recognize this early and who stockpile physical resources are going to have a massive advantage in the years ahead. This is not doom and gloom. This is reality. This is geology. This is physics. You cannot mine what does not exist. And when the mines run out, the price of whatever is left goes to the moon. So here is what I need you to do right now. The mainstream media is deliberately hiding this terminal depletion from the public to protect the fiat system. They do not want you to know that the mines are running out. They do not want you to panic. They do not want you to rush out and buy physical silver. They want to keep you calm and compliant and invested in paper assets that they control. But you are not going to fall for that. You are going to take action. You need to hit the subscribe button and turn on the bell notification right now so you receive my emergency broadcast the exact second the industrial panic over this 12-year cliff hits the mainstream news. Because when that happens, it is going to be too late to buy physical silver at reasonable prices. The supply is going to be gone. The dealers are going to be sold out. Premiums are going to be in the stratosphere. Subscribe now, turn on notifications, and prepare yourself for the greatest wealth transfer of this generation. If you want to understand exactly how the trillions of dollars trapped in the artificial intelligence bubble are about to violently rotate into this microscopic physical silver market, you must click the video on your screen right now. I expose the 5% tech tsunami. Do not wait, click right here, and I will see you in that video.